part 2 of the review. We'll do currencies in this one. Again, if you look at Euro USD, what I want to do is go back a little and start with H4. Look at this downtrend. Reversed from previous to previous week, consolidated last week, consolidated last to last week, and then pumped up. So, is that a reversal on Euro, or is it just going to hit some resistance and then fall off again? That is not important to us. I think the only part that's important to us is this break and this trend, right? On the H4, it's in an uptrend, so we'll look for longs to target this high or that region. Okay. Based on the H4, I think, honestly, I don't think anything because there is no price action this week so far. It's been like 4 candles since the open and there's been nothing. Absolutely. So yeah, skip Euro. Move to the dollar. Dollar inside week last week breaks down completely. It's an inside week breakdown. This week again open, nothing's happened. I expect the downtrend to continue in the market and the market to hit this pink. Because for some reason it just loves this level. By the way, this level is actually the yearly mid-range, or I would say the mid-range of that pump we had from April 21 till August 22. So yeah, for some reason dollar really loves that level, and I think it's going back into that level. So again, so upside expected on Euro due to the dollar going down. Other than that, there's no price action to confirm anything. Yes. Move on to Aussie dollar. Aussie dollar. So monthly expansion. Most of the currencies reversed last week. Very interesting price action because up until this point, nobody would have said that the reversal was coming. But then suddenly this drop off happens. I think this was CPI. Suddenly this drop off happens and the market recovers completely. There's the first break in MS. And then the last to last week we drop off, indicating that this could be a deviation. And then chops, bang. Later in the week, later last week, just keeps on going up, confirming that the low was in there. That's a high, that's a high low, and that's another high. So I do expect a fast continuation to the upside, or at least something like that. So upside expected on these guys and downside expected on these guys. Obviously, it's not this black and white. Midweek reversals happen, and overall just the market happens. So have to move accordingly, asset by asset, trigger by trigger. So far on the Aussie dollar, we have nothing. So we have this low that created that high, and then this happened. I think this was the NFP late Friday, drops off, makes a low, but then nothing. That's nothing compared to the trend we've had. So again, I would look for some sort of a low in, and then a thrust up. So let's assume that the market just keeps grinding. People now believe that the market's going to go down, and then bang, break of market structure, pull back towards the weekly open, or even maybe towards this previous month's high, and then we move to the last week's high, or we just take out the 1.2x again and then drop off. So very intra-week based setup. Do not expect any medium time frame high or a high time frame high to happen this week, although it can because, well, CPI. Expected price action pathway. I just type shit sometimes. High, low, high. Nothing much to see. NZD USD is something we've been skipping on since, I don't know, since this range started forming. The price action on NZD just doesn't suit us anymore, especially since last month and this month as well. Can things be changed? Yes, 100%. It looks very clean to me. So, if we get a high, what I'm going to do is I'm going to buy full reset to target the last week's high. But that will happen once we get a high. Now with CPI coming up, I don't know how I will execute this trade, but we will see. Local high is my trigger to buy a sweep. Yeah, rest of it self-explanatory. So again, expect this low to hold, and then once it makes a high, just buy in them lows and target that high. Coming on to USD XXX. Again, no comments on the price action at all, because up until this point everybody was bullish, right? Everybody and their cat was bullish on CAD, CHF, JPY. Nothing, right? Ranges, gives a big dip, high, low, high, right? People assume that this is low in for the week and it's going to go higher. No, sells off. Wow, just sells off. So well, I don't think you have to overthink this one. What I think you can do is, what I think I can do is, maybe that high gets taken. It doesn't. I don't really care about that. But since after the open of the week we have a local low high and a low. Either one of those things. Either we get a lower low first, then we sweep that high and drop off, or you just bid, right? Or you just place an ask after this low into that high. So go for that. Stop, where is the stop going to be? Maybe if you go in there and have a stop there, possible. Not really. What I can actually do is, since there's a CPI coming in, expect all of these highs to get wiped. That high gets taken or doesn't, I don't really care. And have your stop above the mid range. So maybe you can go for something like this. High gets taken there. But that would trigger after we've had this low, right? This setup will only trigger once we have this low. So once we have that low, buy a big thrust up. Sell a big thrust up. Expect the mid range to hold the price down, right? And then we target the last week's low or the previous week's low. Different channel. Don't care about the dollar. USD CHF, we just discussed. CAD is very interesting to me. And why is that? So you can see that CAD, this is the last month's high, right? Open of the month, CAD attempts to take out the last month's high, fails by a very thin margin, but fails. and immediately heads towards the low of the month. So what I expect from this market is to complete its job, right? Take out the last month's low. Since you failed to take out the last month's high, the next very uh, obvious target is the last month's low. So again, just on the basis of that, I expect CAD to go down, and I'm very, uh, I think there's very high probability for CAD to go down. So maybe not this week, maybe next week. But downside is a high probability on CAD. So I would go ahead with the downside. And what we can do is again simple. One example of this price action is odd USD. If you look at odd USD previous week, look, it did that. So there's Monday opens, takes out the high, and then just keeps on going low, low, high, low, 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 high, low, low. So in that case, you just have to short it. You just have to short it. You just have to say that this market is going to go down. This is the mid range, that's a deviation, and it will go down based on this price action after the weekly open. So week opens, right, goes down. You can either short the body, right, or you can wait it out, and once that low is confirmed, you can again short the body in here. Expect the week's high to hold, give it a bit of a buffer, and the target is last week's low, which is that low, and that's a 2.700. I personally uh, kind of botched up the entry. I placed my entry, once that happened, I placed my entry up there. I had my stop there. Got a bit too optimistic with the entry and then just didn't get filled, and yeah, it went away from me very, very quickly. And after that, I did not get any trading opportunity. Anyways, so lesson learned from that. If the market wants to go down, just sell it. And from the previous price action or from the previous week's price action, we know that this market's H1 and M30 trend is to the downside. So if upon the open it only makes lower highs and lower lows, which it is probably doing, what we can do is we can sell a thrust up higher to target the last week's low. But since this is CPI, want to be careful with how much risk you put on the table, because slippage is going to be higher. Sometimes the slippage goes up to 7-8 pips, 6 pips, and that can result into your stop going from -1 hour to a -2 hour. So an example of that would look like this. So assume that that's my entry and that is my stop, right? I give it a bit of a buffer. Let's say I'm wrong on the trade. Wow, that wish these kind of things were true. I wish, but they are not. So let's assume that that's my entry. I want to buy below the weekly open, have my stop there as a buffer, and let's assume that I'm wrong. So if I'm wrong during CPI, what it's going to do is going to go up, straight up. In that going straight up, it pretty much misses the bid, pretty much misses the bid here, because again there's no liquidity. Liquidity is taken off the table right before news, and that is how we get those straight candles, straight up and down candles. You just take out the limit orders from the order book and then bam, you have those candles. So assume that something like that happens, liquidity would probably exist somewhere around there, right? So if this is -1 hour for me and I get stopped out there, think about how much it is taking off from me. So the trade goes from 4 hour to a 1.8 hour. I go from a 16 tick stop to a 36 tick stop. 36 tick stop. That is 2.2 hour or 2.3 hour. So a -1 hour trade becomes a -2.2 hour trade. So if you go with low risk, for example, if you just go with a, let's assume your account size is 100,000, you go with a 1% risk. You are high probability or high likeliness that you can lose up to 2.2%. But if you only go with 0.5, you might end up losing 1% or 1.2, which is what you originally intended to. This is if things go south. But then during CPI, I advise caution. Even for myself, I do. Actually, this is for myself. This is just me warning my future self to not risk too much during CPI because it can go really bad during CPI. So one thing with CPI is that you can also take the advantage of the entry. So if today you're going to place a bid, you can place it there, no problem. If you don't get filled until CPI tomorrow, you can just raise your bid up there, right? You can just raise your bid up there, raise your stops up there, and enjoy a similar R setup. Because if CPI happens, it first does this and then that. It's a very small wick during CPI, but it does sort of wick sometimes to the upside. So you can use that to your advantage. Yeah, similar kind of situation last week. Not really. This is a CPI candle, but you can see it just go straight up. Doesn't really care about anything. Crazy candle. Anyways. So yeah, that is going to be the plan for USD CAD. Although I need another low. So I need another low there. And once that happens, entry in there, target there. During CPI, entry in there, target there. Let's have a look at the GMA. Nowhere near us. Again, pointless. Session, do we have a session? Yes. So yeah, I will not do UJ. UJ is going off of my watch list. For some reason, you can see GBP is missing from here and UJ is probably going to go. So yeah, GBP and UJ. Something about those assets doesn't fit well with my system, and last week I had a good taste of that. My two major losers came from UJ. Anyways, so that's it for currencies. Very short review on currencies. So since we have some time, I don't know, the timer has been stuck. I'll just go over my system. So first part of my system, I have a three-part system. So first part of my system is very simple. So it is price action. Let me hide that. Okay, let's hide that as well. So you can see this is my previous week's high, previous week's low, previous week's mid-range. Market opens, right? You can see the weekly open, the market is open there. Below the mid-range, assume that the market will go towards the low. Above the mid-range, assume that it will go towards the high. Similarly, if the market opens there and cleanly establishes itself above the last week's high, ignore the last month's high, it will go to the upside. Similarly, if it opens there, goes below the low, assume that it will go towards the low. That's it. That is all I look for. Coming over here, this is just to watch the price action. So this is just to watch the price action on the H4 and on the M30 and mark some of the key SR levels, which you will see all over the way. All over the way up, you can see some kind of an SR. I have not updated my SR, but at this point in time, I don't really care about SR on crypto. I just want the weekly move and I would be done with it. And if you're an investor in crypto, hold on tight. Nobody knows where it's going, right? That's the thing. Nobody knows where it's going, so hold on tight to your investments. Very lovely price action on BTC. If you're an investor and you trade or you just trade on the H4, like trading on the H4, very lovely price action. But if you're someone who likes to zoom in, and then that's not good for you. So yeah. Anyways, that's just my opinion on the price action of Bitcoin and Ethereum. So that's first part of my system, price action and Fibonacci. Second part of my system consists of Ichimoku. So Ichimoku is Ichimoku Cloud. There it is. That's the Ichimoku Cloud. H4, right? Which one's on? Okay. So I have two settings for Ichimoku. This one is supposed to be crypto settings. This one is normal one. I usually use the normal one. So again, above Kumo bullish, this is bullish TK crossover. I wouldn't really go into depth. This is just one part of my system. I use it for confluence. So one example of that confluence is USD CAD. Yes. So one example of that system is USD CAD. So you can see this level is quite thick and it has a very dark color because it is a monthly past Tenkan-sen and a weekly past Kijun-sen. So monthly and weekly Ishimoku levels. What happens? Alright, you can see that the market is in a range. Okay. Well, I can see, you cannot. I'll just draw for you. So that is range low and this area is range high. Okay. This is a range low test. Pretty much comes all the way towards the range low test. And what happens? Market makes a high. This is Thursday. Friday, another high. So upon the open of the week, we are looking for longs. And this level is what gives us the confidence for a long. Now, again, we said that if it is bullish, then we'll buy it. Just buy it. That's a high low, high. That's the confirmation we needed. You can just buy into that level. Or you can just say that we have the trigger there, we have the Ichimoku level here, and that's it. That's all you need for a trade. So again, this is Ichimoku. I don't really go just by the levels. I go by the Ichimoku cloud, how the cloud looks. So in this case, the cloud is bearish and choppy. Bearish because again, down, Ichimoku cloud is red, and choppy because you can see the flatness. Look at how flat it is everywhere. If you want a price action to move, if you want the asset to move up or down, don't care. You want a cloud like this. But in this case, you have to be a little careful because flat cloud means choppy price action. Choppy price action means the market can wipe out both sides, up and down. A good example. Look at that. Again, not really going too much in depth, just second part of my system, Ichimoku cloud. I mostly do not look at it on the monthly, right? I don't like the monthly. It's too long. It takes too long for the price to do anything on the monthly. Weekly, you can see that the Euro USD has had a weekly Kumo breakout. That is actually very bullish, but the caveat here is that look at the future cloud, extremely flat. And that has happened due to the market being in such a bad range. So one can just look at that and say it's bullish, but then you come back here and say it's actually choppy. It is bullish, but it is choppy. So yes, longs are advised, but not any kind of longs that actually, where you bet on the market making a macro high. None of those longs. Bad example of a chop. Bad example or a very bad chop. If I want to have a look at a very bad chop, it is EG actually. So you can see the H4. Flat cloud everywhere. Only here it starts to move, and the Kumo has got going as well. We have an SR there. If we get a rejection there, high probability that the market goes for the low. Because up until the point before this breakdown, this was a deviation, and the market was supposed to go high. This was supposed to be acting as a range low. That was broken last week. So again, bearish, turning to be bearish. So be careful. So that's Ichimoku. Third part of my system, proprietary stuff. Not something you should be concerned about. Proprietary stuff, just there to, just there because it works. I don't know how it works, but it works. So proprietary part of my system exists in there. Just a bunch of indicators I look at if I want to move. If I want to sort of go ahead with a trade, I need the final push. Might look at them, might not look at them. I don't really. Main part or the main component of my system is this. It is the Fibonacci. Mainly the weekly fib. I really love the weekly fib. And then I like playing around the inside week. Fuck that. Inside week. And that's it. That's it. That's all I have. Most likely I'll come back tomorrow to update on